friends, this is your personal financial professor, and today we're going to be talking about how to invest in the stock market. Let's go. Okay, what is the stock market? Well, essentially, if you think about individual companies like, say, Walmart or Target Corporation or anything, these companies are broken up into tiny little bits of ownership pieces called shares of that stock. And so you can actually buy into ownership of a company by buying a tiny little piece of that company that's called a share of stock. So it gives you a very small stake in that company's ownership. And that's what's called a stock. The stock market is all of these companies trade every day pieces of that ownership for each other in this capitalistic market that we're in here in the U.S. And the big question is how to invest in the stock market, okay? Some people will tell you, you got to pick those blue chip stocks. You got to find the next Apple, or you got to find, the next Tesla before they blow up into something that's big. So you do your research. But the problem is that there are hundreds and thousands of people who are getting paid to do that research, who have methods at their disposal that we as normal people do not have, and frankly do not have the time to look into. So the question is, how do then we invest in the stock market as normal people? I want to present to you that answer is something called indexing. Investing in an index. So, talked about investing in individual stocks, but that's risky, right? Because you don't know whether the stock you pick is going to tank, like Enron, right? Like WorldCom, the next day or the next year, and you could be out thousands and thousands of dollars. So it's risky. If you buy one stock and put a lot of money into it, it's risky because you're betting on just a few people in leadership and all the dynamics and economic pressures that go on that one stock. Well, there's things called mutual funds, which are basically professionally managed. So people in finance, and there in New York on Wall Street, will put together these groups of stocks that they think will do well. And those are called mutual funds. And a lot of times they're professionally managed, so they have expense fees associated with them. Again, mutual funds, a group of stocks, may not be the best option either. So what I want to present to you is indexing. Indexing means essentially buying the market. And so if you want to invest in what's called the S&P 500 index, the S&P 500 tracks essentially the top 500 or so largest companies in the United States. And if you were to invest in that, it's very low risk, because what are the odds that the S&P will drop dramatically? If the S&P drops dramatically, you can expect the whole country to be a worldwide depression, recession, whatever you want to call it there. Okay. So indexing is essentially buying the market, buying tiny little shares of hundreds of stocks, and then paying very little expense ratio fees. Not unlike the mutual funds, where you're probably going to be paying higher fees for professionally managed mutual funds. With indexing, you can buy the total market index, which kind of gives you a snapshot of the whole U.S. market. You can buy an international market index, which will give you people will pull stocks, that you buy little stocks from companies all over the world and put them in a index. You can buy that. They all have different expense ratios. You're talking about hundreds of thousands of dollars invested. Those expense ratios become important, because you could be paying up to $7,000-$10,000 a year that you didn't need to be paying when you could have just invested in the market. And by the way, research shows that on average, indexing is a better financial option than trying to pay the management fees for mutual funds or for buying individual stocks. Because on average, people who just throw the money in S&P 500 or invest in the total market do better because of the low expense ratios and not having to pay the professional management fees. So that's kind of a simple primer. Please like, subscribe. I'm here for you in the comments, any questions you have. And until next time, this is your financial professor signing off.